Ok, perfetto. Allora, siamo arrivati a questo webinar
Okay, perfect. So we've come to this webinar, maybe one of the most important webinars of the whole year, probably. Then we'll organize another one for the end of the year, kind of like how the last year was. But let's say this is one of the most important webinars of the year because we're getting into the strategy of one of the strategies that I use to clearly maintain and active my capital. And we're going to see, by the way, also live the statement on the interactive brokers. Then we'll also understand why clearly the choice of a certain type of broker compared to another one. So the operation is an operation on options, that is an operation that is all in all based on some fairly known, let's say. Now you'll see them, even though clearly this strategy has been slightly revised to be able to be clearly, as I can say, applied in a mechanical way, trying to eliminate a little bit the psychological part that we will clearly see in this one too, in this presentation. So I would say let's start, and as we say, start to naturally do a presentation because some key concepts are important. Otherwise, when we get to the statement, it could be done with difficulty to see why some operations, or in this case, all the operations on the ETF are closed in gain. What happens when you move to stocks? Why the choice of stocks was made? What are the final goals of this operation, which is not an operation that closes in a month, in 2 months, in 3 months, but clearly structured on an investing view, etc. So let's say it becomes important to do a setup initially. So the first thing clearly to see is to define that the goal of this strategy is not to speculate on the price, but it's actually to do a management of the strategy and, above all, clearly the management of the capital. That is, the capital is not used to make a bet on the market, even though then clearly it's always a bet on the market, but the capital is seen as an asset, like a property that is put on rent. This is very important from the point of view of setup. Otherwise, it's very difficult to understand why certain choices, uh, because a certain type of management compared to eventually another one, because the strategy basically doesn't have a stop. It's not true that that strategy doesn't have a stop. The stop is intrinsic, clearly, to the strategy, and it's intrinsic to this key concept. We are taking money to put it on the market with the goal of creating a rent. This. So, to be able to do this aspect, since here we are clearly entering the purely part of investing, there is a key element that makes a big difference, which is the emotional part. That is emotional fitness, the ability to train on the emotional part. And this strategy, although clearly, I repeat, I know the options, I have over 10 years, and I clearly started with the strategy's basics. Then I clearly understood when I really saw how to manage the portfolio with options, what it means to do options, because the big investors and the big option traders sell options and buy them, etc. Some details maybe we'll see a little later in this presentation, but the key aspect is exactly this. That is the emotional part. Since I had, let's say, put aside this strategy for several years, it was there in my drawer of tools. I knew there was this very important part. There was the emotional part. If we don't know how to manage emotions, we don't know how to manage money. And since this is a strategy that, let's say, uses a tool like options that have a flexibility that is quite remarkable, it increases. The more flexible the tool is, the more the difficulty increases. And the more the discretion increases, the more you risk ending up, so to speak, entangled in the emotional part, or rather, the emotional part can take over. So this is an aspect that is very important. It's part of the experience, but I came to start exactly from here when I started doing not only the backtest of the strategy, but then clearly putting it on the market. What will be clearly this aspect, but also as we go on with the presentation, here is the vision of the statement.
What we need to notice clearly the most important muscle of the investor, which is clearly indeed the training purely emotional. That is, we have to work. This is important for all the strategies then, from those relatively simpler ones that could be, for example, the breaking of a moving average, a pricing action, everything we want, then of any strategy, but we must clearly have under control what is the key aspect, that is real money. And this is also a very important aspect because at the moment when I repeat, a live strategy, I have to start immediately to train with money and then try to have the minimum effect of the least impact emotionally on the market. So to be able to reduce the emotional impact, clearly I have to reduce the impact, the economic impact. It's useless to do demos, and it's clear that the demo is useful in reality, like how to place the order, how to place the pending order, how to close a position. This applies to all strategies, but even more so with option strategies. And by the way, we will see what happens, how it differs between options, especially in sell, so the sale of options, because here we are clearly talking about selling options. Now we will see the whole dynamic, of course, the main one of the mechanics, and what could happen when you are sell of an option, how the price could be followed. For me, it actually happened in the volatility exposure of let's say, of a few days ago, practically. And so how the position was entered, how it was managed, and how important the backtest is, how it behaved, the position relative to the backtest, and so on. Basically, what matters is the management of real money. Otherwise, any strategy clearly has critical points. That is, it's one thing to manage a real account where anything can happen, the emotional impact is real. It's one thing to manage a little, then we'll see a little. We are talking about 1,500 euros. But what instead is managing money, putting in the strategy into practice, respecting the metric, and so on. So, starting slowly to train, because starting slowly to train for a simple reason. Merino this merino has a goal, and the goal is to spread. That is ETF, more important, more liquid. And in this moment, the third in reality. But anyway, it doesn't change much if you move from SPY to the other. So from the State Street ETF, you can also move to the Vanguard ETF, which in reality has now become the largest ETF in the world. But it doesn't change much, whether it's SPY or the Vanguard ETF. So I put SPY because more or less the counter value is the same. That is, currently it would take many K to do SPY. I say SPY because it also has options, and it's very important to have options daily precisely for this reason, for this type of strategy, because it offers a lot of volatility. So if this Merino is aiming for 80K, it's clear that I need to go and build, in fact, a strategy that brings me the management of 80K with a strategy that purely mechanical. Now we'll see it. So another fundamental point to differentiate this we've already seen in another, let's say, video in other webinars we've on investing. I took it up again and I've proposed it again. The key is precisely
Only this type of verb, the verb that then produces an action clearly, and that is the verb of power. I can do a based on indicators, oscillators, charts, intraday trading, and so when I have my indicator, I've put magic, but I also put myself inside this magic, right? Because I also clearly use this type of indicators and I am, quote unquote, how can I say, shifted towards the verb of power so and I am on the side of the trader because the trader can also avoid trading. When we move from the investor side, the verb changes. The verb starts to become a duty. That is, the investor as a nature is already structured mentally, or rather should be so, and is structured towards the investment. That is, the investor already has the awareness of having a patrimony that must be in the market because it must be invested, or we will do, clearly, the comparison with a real estate, it doesn't make sense to do a real estate holding if you don't buy properties and stay there waiting for, well, if the magic indicator, let's say the signal, the investor is structured in another way because the capital is put on the market because the goal is what? It's to stay at value based on the conditions of the market. This is an aspect that is key. And then the strategy works like a model of real estate. That is, the goal is to manage your portfolio as if it were a real estate holding company. Clearly, our portfolio is not made of houses, no, but